Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, as well as the different asset classes. Now, just a general disclaimer, this video is only for the educational purpose. Please consult your financial advisor before investing. Now, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the market for that particular week could be tricky because Nifty was showing strength and Bank Nifty was showing weakness. So we were expecting some sort of consolidation or a sideways to up movement, and our strategy was buy on dips at any regular intervals, or if there is any some kind of cool off, one should buy and just try to play for the the rally for intraday or two, and one should play for very small moves. So market performed on our expected lines and ended on a positive note. So now friends, let us go to the Nifty daily charts and we'll try to figure out what is the setup and what could be the trend for the next week. So friends, on the Nifty daily charts, Nifty has formed a sideways pattern. You can clearly see on the Nifty daily chart it is moving in an upward rising channel, making higher tops, higher bottoms, and currently you can clearly see that Nifty had traded sideways to positive throughout the week and ended on a positive note on weekly basis. Now this is the rising channel which we have been discussing for the last couple of weeks, and Nifty has been moving in this particular channel, and still until Nifty manages to trade between this channel, the trend would remain positive and and overall, as we have been saying for a very long period of time, that the larger degree trend is always intact, which is still positive. So looking at this particular pattern, we feel that again for next week also. Yes, next week is a truncated week. Monday we have a trading holiday on the back of Guru Nanak Jayanti. So we will be having only 4 trading sessions in the next week. So again, the bias is positive. US market has also ended on a positive note on Friday. So again, the strategy for the next week is again buy on dips, looking at this particular pattern. So friends, now let us discuss the important supports and resistance level for the next week. So in Nifty, the first support in the Nifty for the next week is placed around 19,703 is the first support. Below that, the second support is placed at 19,579, and below that, the third support is placed at uh, 19,444. Whereas on the upside, the first resistance in the Nifty is placed at 19,875. Above that, the second resistance is placed around uh, 20,043, and if it sustains above those levels, then third resistance is placed around 20,133. So these are the important supports and resistance level in the Nifty. Traders should just try to watch out this level and trade in the direction of the primary trend, and primary trend is positive. We might see some sort of cool off or a flat opening on Tuesday, but if there is an intraday dip, I feel that buy and dips should be the strategy for the next week, and the primary trend is still positive at this juncture. Looking at this the daily charts. So, friends, now let us discuss the derivative data of Nifty calls. You will see on the screen in Nifty calls, the action was seen in 19,800 calls, 19,900, 20,000, and 20,100 calls. Now, here you can see there has been a drop in the open interest. Sorry, there is a drop in the option premium. Implied volatility is very low. It is between 7.10 to 7.67. There has been a rise in the volumes, a rise in the open interest. So definitely looking at this particular pattern, we feel that some sort of writing was seen in 19,800 and 19,900 calls. But once Nifty closes above 19,800 mark, then we feel that Nifty has potential to test the levels of 20,000 to 20,050 to 20,100 mark in the next week. So next week again would be slightly flat to positive, or any dips should be used as a buying opportunity. Yes, we might see some sort of cool off in the initial day, maybe in the first half on Monday, but that cool off should be used as a buying opportunity at the lower levels. Now, as I said, 19,800 should be the immediate resistance. If it Nifty crosses and closes above those levels, then we might see a rally for the week. So, friends, let us discuss the Nifty put data. In Nifty puts, you will see on the screen the action was seen in 19,800 put, again same strike price, 19,700 puts, 19,600 puts, and 19,500 puts. Now here you can see the option premium is flat to negative, slightly negative. Implied volatility is low, it is between 7.60 to 8.97. There has been a rise in the volumes, rise in the open interest, but data of put again seems to be quite positive. So we do not see any kind of weakness in the puts. I mean to say any buying, strong buying in the puts, or any strong writing in the puts. So again, the data is flat. So again, flat data is clearly indicating that uh, the trend is, the undertone of the market is positive. So now again at this juncture, 19,800 would be the strong support area. If it closes below 19,750, because first volume concentration is over there and second volume concentration is at 19,750. So if Nifty closes below 19,750, then there are chances that Nifty might drift down to the levels of 19,500. So definitely the data of Nifty calls and puts are positive. uh, any dips should be used as a buying opportunity at this juncture. So friends, now let us discuss the Bank Nifty data, or Bank Nifty daily charts, and we'll try to figure out what could be the trend for the next week in the Bank Nifty for the next week. Now, this is the consolidation pattern in Bank Nifty. You can clearly see, you will see on the screen. You can clearly see the Bank Nifty has been consolidating for last 6 trading sessions, and it is on a verge of a breakout. So definitely on the upside, maybe 43,800 to 44,000 would be the breakout point. Once Bank Nifty crosses those levels, then we might see a sharp short covering rally, maybe towards the level of 44,500 to 44,800 mark at this juncture. So again, you can clearly see Bank Nifty now has slightly become positive. Last week was the Bank Nifty was weak, but at this level, Bank Nifty for next week is quite looking strong at this juncture. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. So first support in the Bank Nifty is placed around 43,566 is the first support in Bank Nifty. Below that, the second support is placed at 43,230, and below that, the third support in the Bank Nifty is placed at 42,796 is the third support in the Bank Nifty. So these are the crucial supports in Bank Nifty. Now let us discuss the resistance in the Bank Nifty. So first resistance in the Bank Nifty is placed at 43,970 is the first resistance. Above that, the second resistance is placed at 44,161 is the second resistance, and above that, the third resistance is placed at 44,444. So these are the important supports and resistance level in Bank Nifty for the next week. One should wait for some pullback. And looking at the chart pattern, we feel that buy on dips should be the strategy in Bank Nifty for the next week. And again, I'm saying that next week is a truncated week, so next week could be highly volatile, but it could be a sideways to up movement, or sideways to up trend in the next week. So friends, now let us discuss the derivative data of Bank Nifty calls. You will see on the screen in Bank Nifty calls, the you will see on the screen in Bank Nifty calls, the action was seen in 44,000 calls, then 44,500 calls, and then 45,000 calls. Now here you can see there is a rise in the volumes, rise in the open interest. There has been a slightly drop in the option premiums. Implied volatility is much low. It is between 7.60 to 9.93. So on immediate basis, as I said, 44,000 could act as an immediate resistance. If Bank Nifty crosses those levels, then we might see the rally towards the level of 44,500, and then maybe 44,800 in the next week. So looking at this particular data, we feel that 44,000 could be the barrier. If Bank Nifty closes above those levels, then we might see a sharp short covering rally towards the level of 44,500 to 44,800 for the next week. Now, friends, let us discuss the Bank Nifty put data. You will see on the screen in Bank Nifty puts also the similar kind of pattern was seen. There has been a drop in the option premiums. Now you can see the action was seen in 43,700 puts, then 43,500 puts, and then 43,000 puts. Now here you can see there has been a significant drop in the option premium. Implied volatility is between 9.79 to 10.95. Now here you can see there is a strong concentration of volumes and open interest in the strike price of 43,700, 43,500. So on immediate basis, we feel that 43,700 could act as an immediate support. If it breaks, then 43,500 could act as a second support. If Bank Nifty drift or slips to the levels between the levels of 43,700 to 43,600, that should be the area where one should go and buy, because the data is showing strength. The undertone of this particular data is showing strength because there is a strong writing of Bank Nifty puts. So we feel that if there is a pullback um on Tuesday, we feel that bulls will come in to defend those levels. So the ideal level to buy in Bank Nifty is almost around, say, 43,700, between 43,700 to 43,600 mark. So definitely, looking at this particular data of Bank Nifty puts, uh, the undertone of the market or Bank Nifty is also positive. Now, again, most important thing, what I have observed is in Bank Nifty, the heavyweight banks, HDFC Bank, Kotak Bank, ICICI Bank are showing some sort of strength at these levels. So these are the banks which will pull Bank Nifty on the upside. So one should watch out these stock also. So definitely the momentum seems to be positive in Bank Nifty. Now the overall data of Nifty and Bank Nifty seems to be positive. Any dips should be used as a buying opportunity, should be the strategy for the next week. Now friends, let us come to the final segment of our show, which is the positional call or positional stock or stock to watch out. I have identified one stock from infrastructure space. The name of the stock is GMR Infra, GMR Airport Infra. So let us go to the daily charts of the GMR Airport Infra. Now this stock has been consolidating for a quite while, and on Friday it has given a breakout of this consolidation. You can clearly see the price volume action. It has given a kind of a flag pattern breakout, or if we want to be conservative, little conservative, then we will consider it as a falling channel breakout. You can see engulfing bullish pattern supported with strong volumes. You can see the heaviest volume, maybe 2.2 crores of volumes was seen in this particular stock. RSI is also positive. The volumes, the breakout was supported with strong volumes. So maybe in short to medium term, maybe in the next 3 to 4 months or 2 to 3 months, the stock has potential to give a decent returns from these levels. The current market price of the stock is 60 rupees. So the stock is looking good at this juncture. So short-term investors, swing traders, positional investors can buy this stock on dips to 59. If there is a cool off next week, one should buy this stock on dips for an upside target of 68, for the target of 68 in short to medium term. So short to medium term means maybe for next 3 to 4 or 5 months. So definitely the stock has potential to give decent returns in the coming days or coming months. So any dips should be used to buy the stock at the lower level. So again, I would like to uh, mention the data. Buy on dips around 59 for an upside target of 68 in short to medium term. So friends, thank you very much for watching the show, and any suggestion you can give in the comment box, and have a nice trading week. Thank you.